The Australian dollar is rising against the US dollar because the markets reckon the Reserve Bank of Australia is a greater than 50% chance to hike rates this year, while the US Federal Reserve is 100% likely to cut twice. Now, that's not to say those things will happen, of course. Those are just the bookies' odds. But naturally, the betting flows through to currencies. And well, I'm calling this a breakout. The Aussie greenback exchange rate has been trending down for 3.5 years, with each peak forming a nice straight line. The rise to 67.5 breaks above that line, and the form guide suggests that 70 cents is likely now. If the RBA does lift rates next month, it's more like a certainty. The rate differential story trumped weak commodities today, with iron ore and oil both down over the weekend, and that led to declines by resources stocks today, which pushed the market index 0.7% lower. Some retailers and banks went up. And meanwhile, the US share market was unperturbed on Friday about the focus on geriatrics that has gripped America. Vice President Kamala Harris has now overtaken Joe Biden in the betting about who will be US president, while California Governor Gavin Newsom is flagging after a brief spurt following the debate. All of them trail a convicted felon. Meanwhile, France looks like being ungovernable, with a three-way split in Parliament of parties that can't agree about anything, which could be a problem since France's debt is stuck well above what it was before the pandemic and almost double the EU threshold. Cutting spending or raising taxes will need one of them to agree with one of the others. And that's finance.